Hey everyone, it is Evan here from the Trade Risk on Tuesday, February 11th, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. So jumping into our dashboard here, remember you can get to this page, thetraderisk.com/market-technicals. Try and keep this updated every day after the market close, but some of you guys email in asking where to get this dashboard or where to see it. If this is a helpful view for you, you can bookmark that link and check in on this after the market close is usually when it updates. So if we look here at the performance for today's session, it was pretty quiet, positive though. With the Russell 2000 out in front leading up about 0.72%. Rest of the major indices flat to slightly positive across the board. The 5-day change numbers continue to be nice and strong here, 1 to 2%, again, right across the board. And we are above all of the key simple moving averages here in the major indices. Now, if we scroll down and take a look at sector performance, we see biotech to the top of the list here, followed by semiconductors and energy. Energy is a new one there because energy has been pretty much a dog sitting in the lower quadrant here of relative performance for the past many weeks, many months, frankly, years for energy. But it is getting some nice mean reversion here, getting a nice little bounce back this week. On the downside, we do have utilities, materials, and staples for the bottom three. And on the and for major markets, we have China, we have the S&P, and we have emerging markets in the top three here. Nice trifecta there. And on the downside, we have volatility, natural gas, and 10-year bonds. So let's jump into the charts here. Let's take a look at what's going on. Looking at the S&P 500, we always like to start our analysis with a weekly perspective here just to get an idea of what's going on in the bigger picture. And essentially here we can see that we've been in this rising channel since October. We had this brief breakdown just 2 weeks ago where we had our first close underneath and a kind of a break and underneath the bottom rising trend line in this channel. We got about as low as 32.16. That's where the selling stopped, and we got the aggressive rebound last week, and we're getting some initial follow through this week. So you can see we're adding on to last week's gains, and what's very important here is that we are in the process now of making new all-time highs in the S&P 500. We are breaking out to new highs here above the January 17th, or I guess the relative highs here around 33, 35, it looks like 33, 37. So that is constructive. That is great for the bull narrative here. They did very swiftly step in last week, bought the dip or the selling sort of dried up here. We broke to new highs this week, and now going into the remainder of this week, into the close of this week, right? Because this is only Tuesday on a weekly chart, we want to make sure that the bulls can actually get a close above last week's highs, or effectively at new all-time highs. If we go down to a daily chart and maybe throw on the busier view here, you can see once again that we are lifting up here at new highs. There's no overhead supply, a little bit of hesitation based on today's session here, so hopefully that doesn't creep into too much weakness into the end of the week where we suddenly start giving these new highs back. I think ultimately, really the bottom line here, I think, of the way I would look at this market is that what we essentially would not want to see right now is an abrupt failure or volatility expansion up at these levels to the downside, right? So we don't want to see an immediate failure, an immediate thrust, a big kind of break of all of these recent lows and a loss of highs here. That would, that would be a tough development here happening at a very critical spot. So the fact that the market is now again suggesting that it wants to continue to trend higher here, to break out, to continue this move. If it were to fail here again, I think that would again probably put in more of a mark on potential potentially putting in some type of short to intermediate term top. Again, not trying to make predictions, but trying to just be aware of what the potential scenarios could be. So right now, as it stands, life looks good here for the bulls. Let's see if they can close up, around these levels into Friday, and we'll see if this trend can continue. The Russell 2000, you can see working itself back up to kind of the upper end of its range. It's clearly a bit more messy here. It's not as clean and trendy as the S&P or the NASDAQ is, but it is working itself back up to the upper end of this range. So again, we're kind of looking at relevant levels of, a short-term level here around 168. We're gonna have to see the Russell break above there, and then of course we have the actual highs made about 3 weeks ago around 170. That would be the next target there, and then we're basically back very close to prior all-time highs at that point, but still got some more work to do if we're looking at prior all-time highs. So that's the Russell, and the NASDAQ 100 again still acting best in class here. You can see has comfortably reclaimed this channel that it's been in since December of this year. It's been leading us higher, continues to lead us higher, and this again just looks still constructive up here, despite even today's little short-term weakness that we saw. So that really covers the landscape here. Getting follow through to last week's weekly bar, that was one of the questions we asked in last week's recap, was just to see if we could get that follow through, if we could get the bulls to start to break through prior highs. So far in early week trading, the answer is yes to that. And what we want to keep an eye out for is any type of abrupt failure here. That would certainly throw a wrench in this recent bullish developments. So that's the market environment. If we go to some other major markets, we go to TLT here. It is down slightly on the week, down 23 basis points, so pretty minor at this point. It's still trading just off of its recent highs here, and still holding kind of the uptrend that's been in place for the past couple of months. So TLT looking good, maybe needs some more time to go sideways. It is starting to pull back here 2 days in a row, or at least today getting follow through to the downside. So we'll see if this can hold the relevant low from last week. I think that's the big one there that we can keep on our keep on our attention list here of around 142. Now, if we go to gold next, you can see gold also moving sideways here. This consolidation is continuing, not breaking out, not breaking down, just moving sideways here, and it's been doing that for a little over a month now. It had a nice run up in December into early January, so it's working that off sideways here. Looks like it needs more time doing just that. Last but not least, or actually no, we still have silver. We have energy to look at after this, but if we look here at silver, it's kind of similar to gold, where it's still just in a holding pattern right now. Again, the holding pattern looks a little different than gold. It's not quite a channel as neatly as I'm trying to brute force overlay these trend lines down here, but I think you get the picture. It's been consolidating with a slight drift to the downside. More recently, you can see a lot of overlapping sideways candles. So same comments that we've been thinking about for silver. Really just want to see this over $17. If it starts breaking over $17, that's the cue for some momentum, for some breakouts to actually occur. And until and if that happens, we just want to kind of let this play out and wait for this to sort of prove itself before getting too excited. Now, last but not least is energy. If we go to USO here, you can see still struggling down here along these multi-month, almost multi-year lows. It's trying to hang on to an important prior reference point, which is around this 1050 to 1075 level, which has been acting as support going all the way back to late 2018. In fact, the market briefly traded around there, found some support before breaking down. Then it found some support again in early 2019, mid 2019, late 2019, and now here we are again back at this reference point. So still looks to be struggling, a little divergence going on here in MACD, but all in all, we still have to just kind of wait to see how this reacts here. Sellers still in control. They have the benefit of the doubt here in the short to intermediate term, as this trend is still sharply lower. So we'll see how that ends up resolving itself. And natural gas, unfortunately, broke down again. Surprise, surprise, as this has been certainly, getting beaten up to the downside is nothing new for natural gas. It's been doing it for years on end at this point, but it had a little bit of life in here. We sort of identified this in our last video, looking at potentially for some mean reversion up here to get some type of dead cat bounce going on these overlapping days. Had a couple of attempted resolves to the upside, but of course, we came into this week with a gap down to new lows, and it's kind of back to that same song and dance trend to the downside. So natural gas, could certainly, pop and revert and just get a little bit of a dead cat bounce at any point, but timing that is certainly been very difficult here. The downtrend continues to stay intact, and we'll see if that changes into weekend. So that's it. That's the midweek recap for this week. Remember, earnings season is still going on out there, so do double check your earnings dates. Otherwise, thanks so much as always for tuning in. You can subscribe on our YouTube channel or follow us at The Trade Risk. We'll see you back here tomorrow for some trade ideas during the market session.